In the first quarter, Nvidia's revenue soared to $26 billion.
Stock's up over 125% so far this year. We've seen that pull back from all-time highs.
Nvidia's surge is driven by the AI arms race, with big tech companies clamoring for its cutting-edge chip.
Our TCO is so good that even when the competitors' chips are free, it's not cheap enough.
A Bernstein analyst just went all in on Nvidia stock right before a huge event. Is a major shakeup coming in tech and finance? The AI world is buzzing, yet some are still doubting how much it'll really change things. But they're moving cautiously, integrating AI bit by bit, a slow dance in a fast-changing field. What does this careful strategy reveal about what's really going on in the tech world? Let's dig deeper into what this bold move could mean for the future of AI and our investments, the market's shifting sands. We're still figuring out how AI technology will really affect the market, and there's a lot of talk going on. Many people doubt AI's big impact, saying it might not be as revolutionary as we once thought. This skepticism is showing up in articles that question AI's potential and whether certain stocks can still grow. It's normal for people to feel a bit worried. Stock prices and financial numbers have shot up so fast that many are questioning if this growth can last. But when we look at the shares now, they're actually more affordable than when the surge started. Even though stock values have gone up, the demand for AI components and their financial impact have grown even more. We're seeing that top tech companies are spending a lot of money on AI. This is a good sign, showing strong growth and investment in AI infrastructure. But there's some tension because big companies are still experimenting with AI. These companies usually take their time to adopt new technologies, and AI is no different. They are careful, slowly figuring out how to use AI in their work. Even though there's some worry about how quickly companies can adopt AI, the overall market and technology advancements look very promising. The rise in investments and financial impacts show a strong path for AI to transform businesses and markets. But remember, it will take more time and experimenting for companies to fully use AI's potential. The demand for Nvidia stock is still strong, with no signs of slowing down. After a brief drop, the stock price jumped up again thanks to positive reviews from market analysts. This year, Nvidia stock has increased by over 160%. But if you haven't bought shares yet, you missed out on a 200% return over the last year. With such impressive growth in the recent dip, many are wondering if Nvidia's stock rise is over or if it's about to go up again. Predicting the stock market is very hard, but experts like Stacy Rasgon from Bernstein think Nvidia still has room to grow. In the semiconductor sector, where Nvidia is a major player, experienced analysts are closely watching its progress. The big question is whether now is the right time to invest in Nvidia, given its huge rise and potential for more growth. Nvidia's current market value is $3.15 trillion. In a recent discussion about which tech giant could hit a $4 trillion market cap first, analyst Gil Luria said it's unlikely both Microsoft and Nvidia will reach that milestone at the same time. He pointed out that while their growth paths are linked, they are also competitive, making it tough for them to achieve such a feat together. This competition in the tech world shows how dynamic and constantly changing the market is, offering both opportunities and challenges for investors. The tech sector is known for its rapid changes and intense competition, which can make it tricky to predict future winners. If Nvidia keeps its strong position in the market, some worry that Microsoft's finances could take a hit. They might see their profit margins get much smaller, raising concerns about their overall profitability. However, it's important to note that not all current spending is brand new. Some of it is just shifting from older tech to newer ones like GPUs. Right now, investment in older data center components like CPUs and servers is quite low. We're seeing more spending on advanced GPU-based systems. This isn't just about new AI technologies. It also includes well-established areas like recommendation algorithms used by big tech firms like Meta. These are mature technologies that already show clear financial returns. Tech changes lead to surprising financial shifts. The financial impact of tech investments on Microsoft. Now let's talk about the money side. Even if the profits from these new tech investments take a little longer to come in, the impact on Microsoft's profit margins isn't as bad as you might think. A friend of mine who is an expert in Microsoft's finances believes that the higher cost from this tech shift might only reduce their profit margins by a few percentage points because of higher depreciation costs. This isn't a huge change, and certainly not enough to cause big financial problems for Microsoft. The rise of artificial intelligence has brought big changes in technology. Research shows that after 2 tough years, the global PC market started growing again in early 2024. This comeback is a big deal after the recent declines. Additionally, smartphone sales have improved worldwide. In the first quarter, global smartphone shipments went up by 7.8% compared to the same time last year. This is the 3rd quarter in a row with growth, showing a strong recovery and more interest from consumers in new tech. But that's not all. These trends show how tech industries are bouncing back from the pandemic. The recovery is even more impressive with ongoing AI advancements, which keep driving consumer interest in tech innovation. These changes point to a bright future for both the PC and smartphone markets as they adapt to new technologies and changing consumer needs. At this early stage, experts predict huge growth in the artificial intelligence (AI) industry. They believe the current $200 billion market could grow to over $1 trillion by the end of the decade. Stacy Rasgon, an analyst at Bernstein, sees Nvidia as a top AI stock and a great option for investors interested in AI. Today, Nvidia's stock is climbing. This rise is due to positive reviews and higher price targets from major financial firms. For example, UBS has raised its price target for Nvidia from $120 to $150, noting strong demand for the Blackwell chips. Wolfe Research also adjusted its price target to $150, highlighting Nvidia as a standout investment in the semiconductor sector. But the story doesn't end there. UBS specifically pointed out the high market demand for Nvidia's Blackwell rack-scale systems, even though market feelings have been mixed lately. This strong interest shows Nvidia's important role in the growing AI field, making it a smart choice for investors wanting to get involved in the fast-changing AI market. Over the last few weeks, investors have shown a mix of caution and optimism, a trend known as a wall of worry. This means they are hopeful, but also careful about the market. If everything goes as predicted, our stock values might grow nicely. At the same time, financial experts at Wolfe have raised their stock price target to 150. They believe this is due to a better choice of profitable products and more earnings from the high-end market. Let's explore the rapid growth of a tech giant, the rising star, Nvidia's unstoppable ascent in the tech world. Despite regularly following market trends, it's still fascinating to see Nvidia's potential to outshine others. The anticipated growth isn't just a short-term spike, it's a sign of strong, ongoing performance. This continuous improvement indicates that Nvidia could remain a leader in the tech world for years to come. The optimistic yet cautious market sentiment reflects the unpredictable and exciting nature of the tech industry. Bloomberg said that the price of a share was $3.69. Just a few minutes later, UBS analysts had a different idea. They thought the price should be closer to $5 per share based on their detailed market reviews. Then Wolfe suggested a middle ground, estimating the share price at about $4. This difference in opinions about the share price sparked a lot of discussions. Some people are worried about Nvidia's future growth. They think it's unrealistic for Nvidia to keep growing so fast. But UBS was more positive. They argued that their higher estimate was supported by recent data and market trends they saw, suggesting that the company could indeed keep growing. When we talk about why these products are still so popular, it's clear that people still really want them. Many are curious to see if this trend will keep going. But for now, the products are still impressive. You can find prices as low as $5, going up to $360. Our friend Corey Johnson from Futurum Research said that in his long career, he's never seen anything like Nvidia's rise. Unprecedented is a word that's been thrown around a lot lately, but it fits Nvidia's situation perfectly. Stacy Rasgon has often said that Nvidia's stock is cheaper than it looks.
You can sort of look at where the shares are trading on a valuation basis. They're much cheaper than they were before this started.
But is it really? The reason people invest in Nvidia is quite simple. Big tech companies that are building huge data centers for complex AI work prefer Nvidia's chips. They choose Nvidia over any other brand. This has helped Nvidia capture up to 90% of the market in AI chip production. But this wasn't the most surprising part. The real reason Nvidia is ahead is because of its CUDA software. CUDA makes it much easier for developers to set up these chips for AI tasks, putting Nvidia way ahead of its competitors in the tech world. And this isn't the only interesting part. Over the past few years, Nvidia stock has seen amazing growth. With the AI sector expected to grow even more, the current value of Nvidia stock looks promising. Although some people think the forward price-to-earnings ratio of 48 is high, the chance for more growth is huge if Nvidia keeps beating expectations and driving innovation. Some analysts worry about competition from companies like AMD and Intel, but Nvidia is still the top supplier of GPUs needed for advanced AI applications. Nvidia shows its commitment to staying on top through big investments in research and development. Just last quarter, Nvidia spent $2.7 billion on R&D, much more than AMD's $1.7 billion. This strategy not only shows Nvidia's dedication to keeping its market lead, but also highlights its plan to stay ahead. As Nvidia continues to put money into innovation, it looks set to keep leading the industry, pushing the limits of its technology, and shaping the future of artificial intelligence. Nvidia, a top player in the tech world, always works hard to improve its products. This helps them stay ahead in the market. Right now, investors are thinking about how to invest in Nvidia's stock. This question is even more important because Nvidia recently got a downgrade. New challenges shape market leaders, the dynamic world of Nvidia's market leadership. Now back to Nvidia, they keep their top spot in the industry by making smart moves. Investors need to think carefully about their next steps with Nvidia. So what should investors do next? First, they need to look at how Nvidia keeps improving its technology. This continuous progress is key to their success. Also, understanding the recent downgrade and what it means for the future is crucial. But there's more to consider. Investors should also look at the broader tech market and how Nvidia fits into it. This bigger picture can help make better investment decisions. This morning, analysts at New Street Research made an important change about Nvidia. They changed their rating of the stock from buy to neutral.
Nvidia did get hit with a downgrade this morning from New Street Research. Analysts at the firm saying they see limited further upside and are downgrading the stock from buy to neutral. Well, Brett.
They believe the stock price might not go much higher. But things are not so simple with Nvidia. Everyone seems eager to be the one who predicts Nvidia's next move. Recently, JP Morgan said that the demand for Nvidia's chips is still higher than the supply. This could cause the stock price to go up and down. Given how well Nvidia is doing, it's hard to see why anyone would want to give up on their stock. They are performing amazingly well, almost like a powerhouse, and are close to reaching $1 trillion market value. This is interesting because while some people are stepping back, key factors like supply shortages and high demand tell a different story. It makes you wonder how anyone can let go of such a stock when the company keeps outpacing supply with high demand. Yet this wasn't the worst part. Such surprises can really shake your confidence and make you question your investment plans. It's important to stay calm and think about why you made your investment decisions in the first place. Remember, the goal is to ensure long-term stability, not just react to short-term market changes. Hear that? Losing your job and a client's money is a real risk. It's tough to convince someone to sell a stock that everyone thinks is bad news. This isn't like the late 90s dot-com bubble with companies that weren't making any money. This is about solid, real technology. And Nvidia is ahead of the competition by years. They are truly leading the industry. There's a lot of doubt about Nvidia's stock right now, which seems over the top. People investing now need to see the big progress and leadership Nvidia has in the AI chip industry. Their advancements aren't just small steps. They're setting the pace for everyone. Nvidia isn't just working on basic stuff. They're shaping the future of AI technology. With every chip they make, they widen the gap between themselves and their closest competitors. This isn't just a short-lived trend. Nvidia's technology is strong in defining the future. As the debate goes on about whether to invest in Nvidia, it's clear their technological leadership and innovation are not short-lived. They've built a foundation that's hard for other companies to match. For those thinking about the long term, Nvidia isn't just a smart investment, It's a leap into the future of technology. High stakes in the evolving tech industry. The high stakes of Nvidia's future. When investors buy Nvidia stock, they are looking forward to the company's future growth, not what it has already done. But there's a big risk here. If Nvidia doesn't meet expectations for any reason, the consequences could be severe because of the significant progress it has already made. A setback could hurt more than usual. However, this doesn't mean investors should avoid Nvidia completely. Even with these risks, the stock could still bring good returns if the company keeps growing and meets its future goals. The important thing is for Nvidia to stay on its upward path and deliver on its promises. This will be crucial for the stock's performance, balancing the risks with the chance for gains. But here's the tricky part. If Nvidia stumbles, it could be a big deal. Investors need to watch closely to see if the company is staying on track. If it does, the rewards could be substantial. Yet the stakes are high and any misstep could be costly. Nvidia is looking at a big period of growth in the coming quarter. As we near the end of the second quarter this month, the company is aiming for about $28 billion in revenue. If they hit this target, it will be an incredible increase of about 107% compared to last year's revenue. This achievement would also mean an 8% growth from the $26 billion they made in the first quarter of this year. Such consistent growth shows Nvidia's strong market presence and high demand for its products. However, the real story is in how Nvidia keeps growing quarter after quarter. This steady rise not only boosts its financial health, but also cements its spot as a leader in the tech world. But what do you think about buying Nvidia at its current price? Is it the right time to invest? We want to hear your thoughts. So please share them in the comments below. If you have your own valuation of Nvidia, let us know that too. For those interested in what companies like Nvidia are up to, we have more content just a click away. Check out our next video to stay updated on their latest activities. We're excited to hear your thoughts and see you in our discussion. Do you think Nvidia's market dominance will last? Share your thoughts in the comments, like the video, and don't forget to subscribe for more.